We're going to take a look at our market calendar. I'm Marlon Bowling with you here on the Market Day Report, and we're going to take a look at the calendar and then get into our grain analysis in this first segment here. On the market calendar, coming up tomorrow, we get USDA's cold storage report after the markets close up on the daytime session. It'll be released at 2 p.m. Central Time on the 24th. That's Friday. We get the March cattle on feed report. That also comes out at 2 p.m. Central Time. On March 30th, that'll be a big day for livestock reports. It'll be the quarterly hogs and pigs report coming out also at 2 p.m. Central Time. And to wrap up the month on March 31st, that will be a big day because it'll be the quarterly grain stocks and the much anticipated annual prospective plantings report coming out from USDA. A lot of traders looking forward to that report already. How much are they looking forward to it? Well, let's find out by going to the trading floor in Chicago. We have Todd Bubba Horwitz standing by. He's with BubbaTrading.com. And Todd, that's about all I hear people talk about now is that upcoming prospective plantings report. There doesn't seem to be much else moving the market right now.
Yeah, good morning, Marlon. You know, the markets are kind of in a state of flux here. I think that there's a lot of things intertwined together. However, I think we've got some issues here in the grain markets here. I think we're at some pretty key spots in corn at 360. I think if that doesn't hold, it could get, we could see some further downward push. And soybeans, you know, last I looked, we ticked back over 10. But if we stay below 10, that brings 940 into play, and I don't think that's obviously very exciting at the moment. And wheat looks like 425 has got a hold. And again, we're seeing some extra pressure here after we had the Fed, after the dollar is now breaking as we thought it would. So are the grains, which is obviously a sign that they had built in ahead of time, and now we're seeing the result. And that's one of the things I want to warn everybody out there about is, again, the news is pretty much priced in the market, and usually it's overshot. And finally, when the news actually comes out, it's a disappointment. And usually the markets will go the opposite way of where they've tried to go beforehand.
All right, I'm glad you brought that up. I noticed the U.S. dollar was really getting hurt this morning. Let's take a look again. We have June futures on the U.S. dollar index, now quoted at 99.580, and that would be down 650 points. That could be very significant when it comes to our ag export potential. Do you think we're at the point yet here, Todd, where that can kind of counterbalance the big supplies coming out of South America?
I think what will happen, Marlon, I think we're going much lower, so I think we'll get there. I think we will. And again, I'm still very positive and looking for a very, very solid year. But I do think that the dollar's got more room to go. I think we're probably looking at another 5, 6, 7% to the downside. And then I think it will have a very positive effect on the agricultural space. And I think that will work out very well. So I'm looking, as you know, I'm looking for 93, 94 is my target here. And I think we'll get there fairly easily. And I think it may get there even faster than I thought if you're looking at some of the other things going on around the world. So I think it will help us once it does come out. But it will take a little bit more time here before we can work it out.
Okay, let's walk through the prices. We'll get everybody updated here on current futures trade on the corn. We're down 3 in the May at 360.5. That's on the low of the day. December new crop down 2 at 384.25. 1 tick off of its low of the day. On the soybean trade right now, your May contract down a penny at 998.5. As you mentioned, below $10. November new crop unchanged at 993.5. In the wheat trade in Chicago, we have May down 5.5 cents at 424 3/4, and July down 5 at 440.5. Meanwhile, Kansas City wheat, we have the July contract, that new crop contract, at 450.5. Down 6 3/4 once again today. Still a lot of talk about possible rain in the plains. In the Minneapolis wheat trade, we have July currently down 5 1/4 at 547.5. And looking at that cotton market, we have July now trading 45 points lower at 78.09 cents per pound. We'll come back in a moment. And Todd Bubba Horwitz and I will be talking about our livestock trade when we return after this. We're talking with Todd Bubba Horwitz of BubbaTrading.com. He's located in Chicago at the edge of the trading floor. We were talking during the break in between segments here about this oil market. And the oil has really sagged from its earlier highs when it was up around $54 per barrel, as you recall. Now we're at 48.03. We're down 19 cents once again on the day. Got as low as 47.93, so it breached that $48 mark. And Todd, you still contend that we have a ways down to go yet in this crude oil trade?
Yeah, I would not, Marlon. I wouldn't look to be a buyer until 40. I think if we get below 45, 44, 43, maybe some farmers and producers start looking at maybe taking part of their fuel cost off the table there. But we've got room to go down. We've got such an oversupply. And most of this rally was built on artificial OPEC, which what do we care about OPEC? We have nothing to do with OPEC. We've got enough oil in this country, and the build doesn't look like it's going to be going away anytime soon. And as you look at the formation, we're going to go lower. Now, I would not be surprised at all if we see a little bit of a bounce, maybe back to 50 here in the next couple of days. But overall, that'd be a sellable bounce in my book, and I'm looking for much lower prices as they go forward.
Interesting. Okay, I want to focus now on the livestock trade. Let's go to live cattle, see how we're doing. We had cash cattle trade reported yesterday in the plains at 125. I thought that was extremely curious, where we had the last trades reported back on Friday at 131.
Yeah, well,
and
there you go.
That's quite a drop in the cash trade, but now the futures market is rebounding today. April live cattle are up 92 at 119.82. How does that work?
Well, I think you're still having a little bit of a squeeze. I think they trapped a few guys short here, a few speculators, and I'm a big seller right here. The 120 level. Again, over long term, I'm very positive we're going to see better pricing. But I think they've gotten way ahead of themselves, and I think there's a big cash squeeze, and I think that's going to work its way out in the next couple of days. And I think you're going to see lower prices. I think maybe we might be building up into the cattle on feed report again as well, which I think is going to be. It'll turn out to be a disappointment because of the giant rally that we've had into it already. And those are things that I look at. I think we've gone way too far based on where we should be and based on what's going on in the future. So I think that you're going to see probably some pretty good selling coming in here pretty quickly.
And we still have a $13.50 premium between the nearby April contract and that August contract in the live cattle market out there. Is that anything that can stick around very long like that?
Well, yeah, that gives me more confidence that we're going to see some selling. That's really a debit, not really a premium to me. And, typically you would think that they would be a higher price out in time, but of course they're not. And that's a sign that we've got some weakness coming through the system pretty soon, and that we might have seen an overbuild into this. We get in markets and speculators, and everyone wants to play. Sometimes they get just a little bit too overexcited and too much enthusiasm, and they think that they can never go down again. And of course, that's just the time when they start to fall.
All right, let's recap the feeder cattle trade. Look at those futures for everybody. On the feeders, we have the April contract 60 higher at 133.05. The May contract 62 higher at 131.90. And now on the lean hog trade, as we switch over there, we currently have the lean hog futures on the April contract down 65 at $68 even. May down 74 at 72.88. So Todd, thanks again for sharing all that insight into the markets. Appreciate it very much. Hope you have a great day.
You too, Marlon. Thanks, man. Have a good day.
All right. Thanks, Todd. Todd, Bubba Horwitz. Terrific website there, Christina, BubbaTrading.com. You need to check that out.
Yeah, well, I have. And he's also on Facebook and Twitter with some great helpful tips as well. Thank you so much, Markets Editor Marlon Bowling.